I vote for a really clear market trend. Hi, I'm Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of February 29th, 2016. And I open saying I'm voting for a clear market trend. The problem is I don't think we're going to get it. I think we're going to get some volatility, particularly as we head into the primary voting, Super Tuesday coming up this week. My outlook on the broad market and the fact that we're in a bear market trend is not changed, and I'll review that on the charts here in a few minutes. But I do think we're in for some volatility and a little bit of unpredictability. I want to take a look here at a great quote that just talks about voting and volatility. So here's the quote from Benjamin Graham, and he said, "In the short term, the stock market behaves like a voting machine," meaning it responds to news and can be a little bit emotional. But in the long term, it acts like a weighing machine, meaning the true value in the long term will be reflected in the stock price. And Benjamin Graham is considered the godfather of value investing and was Warren Buffett's primary influence in terms of market analysis. So that's a good comment as we head into Super Tuesday and the presidential primary voting. I think as those things play out, there's no other really big economic news coming that's planned. There's some standard reports coming out next week, but I think they're going to be overshadowed by what's going on at the poll. I think there'll be some short-term volatility around that. So here's a headline in an article I'd like to look at for just a minute. This is from Morningstar, and the headline is, "Oil drags on stocks, but the Dow and the S&P 500 gain for the second week." Well, they certainly have gone up. And the article goes on to make a point here, and I'll scroll down to it. So here's the point in the article. They say that the oil prices in the S&P 500 have moved together in the short term. They've been highly correlated with a correlation that's estimated at about 90%. Well, that's really interesting, and I'm going to show a chart here in just a minute that actually shows the reality of that. So here's a chart that's got the S&P 500 futures contract on the top half and the crude oil futures contract on the lower half. This is on a 60-minute time frame. And if you just look, they are moving nearly in lockstep over the last few weeks, over this short time frame. And the question that came into my mind is that historic, or is that an anomaly? Is that unusual? And let's just bump up to a higher time frame here and answer that question. Let's go up to a daily chart. So this is 60 minute. Every price bar here is 60 minutes. So let's bop up to daily. And even on a daily chart, you can see, well, definitively the answer is no. On this daily chart, which goes back nearly to the beginning of 2015, you can see they were not moving in lockstep earlier. And let's go up to a weekly chart too and just see, a bigger time frame. Every chart here, every price bar here is a week. And there's almost an inverse correlation between them. As the stock market rallied for several years, oil went down, down, down. And that just kind of makes sense that, even if the short term, if they are linked, that, it's a pretty small percentage of companies in the overall economy where rising oil prices is a good thing and would make stock prices go up, right? Rising oil prices generally means higher expenses and higher transportation costs, less consumer discretionary spending, all that kind of stuff. So this is the longer term picture. It is interesting that they are correlated in the short term, and just history would tell us that pattern of that short term correlation is probably going to be broken at some point. And that kind of fits with my projection, because if you've been following, my analysis shows that the S&P is in a bear trend, and we should expect more lows. The S&P, the Nasdaq, the Dow are all have clearly established bear patterns, and that oil may be poised for a recovery from this long downtrend that it's been in. And so I just wanted to look at charts and see, gee, if oil recovery really happens, does that mean the market's going to go up? And I think historically the answer to that would be no. Now I'm going to base all my trading on the realities of individual charts, but I just thought that was an interesting thing to look at for a minute. And to get some perspective, let's look at where we are year to date. in the markets, the broad markets here that I'm paying attention to. So yeah, the broad indexes, the S&P and the Dow and the Nasdaq, they had a couple weeks where they went up, but they're still down. They're still down pretty significantly. The Dow or the S&P's down 4.69, the Dow's down 4.51, the Nasdaq 8.33, oil down 18.40, and gold up 15.07%. And so, I think again the bear market's still going on. Nothing's really changed. Price doesn't move in straight lines. So the fact that prices went down early in the year, they're retracing a little bit, completely normal. And we'll look at that on the chart here. And I just wanted to review here our results year to date. So by trading the reality of the markets, being on the right side of the trend, basing our trades on strict risk management rules and looking at each particular chart, we've been able to get good results year to date. We've closed 8 trades. We're in these an average of 41.5 days, and we've had 1 loser, 7 winners, a very high win rate, a very high payout ratio. So year to date for trades closed, we're at a 12.52% return on the account, and we've got about 8 positions open, and many of those are in good shape, already deep in profit locked in. So as they close out over time, we expect to be booking more profit. And as gold shot up, we got into some really good trades on gold, and we're looking at some mining stocks, and we've got some shorts on some of the big companies that should be moving down with the broad market. So we're in really good shape. We're really pleased with these results. People who watch this video, subscribers to the newsletter, you're all eligible for a 23% discount to my stock picking service. If you'd like to check that out, there's a link on the screen. You can check it out. There's a 10-day money-back guarantee, so you can try it. You get 2 weeks worth of picks, and you get a 10-day money-back guarantee. If it's not for you, you don't like it, 100% money-back refund, no questions asked, no hard feelings. So if you're interested, have a try. Love to have you on as a subscriber. So here's the Dow Industrial chart, the daily chart. And just to reiterate, we've had some pretty significant lower high pull up, lows. It's pulling back up right now. We had this sequence here of lower low, lower high, this wave here. It went down, it stalled a little bit, but all the indications are that this is going to go take out this low. Now, we've got a little short-term recovery here, over the last couple of weeks. Again, that's expected. These things don't move in straight lines. It would have to go clear up above this line here, clear up above this line right here at about 17,803 to change the forecast, to change the longer-term view, and to say that we're not in a bear market. And I just don't think there's a high likelihood of that happen. The higher probability is that it may head up for another week or two, who knows, and then reverse back down and continue the trend and put in more lows throughout this year. Really hard to tell what it's going to do over the next week or two. And again, I think there's going to be some volatility. There's going to be some uncertainty in the market, particularly as the news about the election plays out, and people will respond to that. So in the short term, really, really hard to predict. In the larger time frame, the bear market's still underway, and there's still great trades to be had on individual charts and issues, and we're in those. But we'll be in for some interesting times here. So that's the Dow. The S&P is really doing the same thing. They're moving together. So I've given my projections. Those are on other videos if you want to look back, and I'll update them in time if anything changes. But let's take a look now at oil and then gold. So here's the oil futures contract on a daily chart. And, everybody knows it's been in a really, really long downtrend. I've said at some point this is going to recover. It's going to retrace into a corrective wave back up. When's that going to happen? We don't know, but we know what the proof will be when it does. We will see a series of, I've talked about this on many other videos, of Dow theory, higher highs, higher lows. At some point, when it does put in a bottom, it will put in a higher high, higher low, and a new high. And that will really signal that the recovery trend is underway. Now, it's in a bit of a consolidation here. It may have put in a bottom here. This could be it. We have put in this kind of minor high. If it pulls back and then blasts through this line, 3709, that could be the signal that the recovery in oil is starting. And when it does happen, it's going to get up, probably 65 to 75 range. I've showed that on longer term charts. And that'll be really exciting. There will be some great trades on energy stocks. That will be almost 100% increase in oil itself. And I'll show you a gold trade that we're in where other stocks associated with this commodity can go up dramatically more than that. So we'll be looking for those. So it's not there yet. It's not proven, but it could be. It's getting close, and we'll just continue to provide updates on that. Well, here's gold. Gold's just off the hook right now. It's awesome. Using that same analysis that I talked about for oil, we were looking for this bottom, a higher high, higher low, and a new high. And I said, it's been about 4 weeks now. I said, hey, if our gold goes through 1113, it's on, man. Well, look what happened. It is on, and it's continuing up now. It's moved up really dramatically. Could we get a little pullback here? That'd be normal. That'd be expected, and then to head back on. Again, gold and the equity markets move in a rough inverse correlation. If the market heads up a little bit, that would correspond with a pullback in gold. We may get volatility in both of these as we go into the Super Tuesday voting and let that settle out. But again, the trend here, gold's got a long way to go up. I gave you the updates on the weekly chart last week's video if you want to go take a look at that. But let's look at this good gold mining stock. Just an example of what you can do if you're got some good analysis techniques, some good tools here, and you're trading with discipline. So here's a gold mining stock. This is MUX, McEwen Corporation. It's really following the same pattern as gold, but what's different is the scale that we're dealing with. This is a pretty low price stock, but it trades at large volume. So we got in at $1.25. Again, higher high, higher low. It blew in, started putting in a new high. We got in here at $1.25. Now we've sold a third of our shares, and then a third again, so we call that scaling out. So we've already locked in our profit. Our entry was here. Our current stop price is here at $1.50. And so if the worst thing that happens is come down, hit our stop, we're out, and we're only have made about 30% on the trade. But we're staying with it. We're going to trail our stop up as new highs, new lows are put in. And when this trend is over, it will tell us, and we'll get stopped out. But we got in at $1.25. It's sitting here at $1.82. This thing could go up, and double. Either way, gold went up 10 to 12%. We're up 30% by trading a related smaller cap stock. And these kind of things are going to be available in energy related stocks when oil does prove that it's heading up. So again, if you're interested in subscribing for these kind of picks, there's a link on the screen, and you can check that out. Love to have you participate. Well, that's it for the week. Always use risk control. Have fun watching the voting results. I vote for a clear market trend, but we're probably not going to get that. We're going to get a little bit of volatility. So be careful, watch it, and base everything on the realities of the chart in front of us. All the news, all the fundamentals matter, but they all come together in a pretty easy read picture on the screen. Have a great week. Thanks.